Say?
sessions, but I'm not aware of the these kinds of things where
Okay, I'll show
lows
you.
and highs get manipulated, all that kinds of things.
Yeah, I'll show you. Now, this is what happens. Okay, this is what happens. So let's say now we know that Asian session is mostly a consolidation, right? Asian session will not move a lot. Okay, it is mostly a consolidation like this. Okay,
Yeah.
so Asia, yeah, Asia ends at the New York midnight time. Okay, Asia ends at New York midnight time. That is 10:30 a.m. for us. Okay, so Asia ends at the New York midnight time. So what happens is something like this now. There's a set of people called the session breakout traders. Okay, the session breakout traders. Now, like trust me, there are like groups on Instagram, pages on Instagram that teach you these strategies. Okay, session breakouts. So what they are gonna do is they'll have their buy stops above Asia, sell stops below Asia. Okay, because they would think if price breaks out of Asia like this, London is gonna be, or this whole day is gonna be bullish, or is London will continue this move to the upside. That is what they expect. Okay, that is what they expect. So they will have their buy stops above Asia. Okay, they'll have their buy stops above Asia. So after the New York midnight time, what happens is there will be a false run in the opposite direction like this. Okay, what are they doing? There will be a false run in the opposite direction. What they're actually doing is they're inducing bias into the market. See that? Inducing bias into the market. Now, everyone would think, okay, now it has broken out of Asia, so London is going to be bullish, and all of these trend lines and all of that stuff is forming. See that? All of this stuff is forming, and then what happens is with London open, bam, it will reverse. Okay, the whole thing will reverse like this. Okay, so keep in mind, most of the times there will be this false run in the opposite direction. Okay, now yeah, I did not make these things up. This is from ICT. Okay, this is what ICT calls the Judah swing. Okay,
Judah?
this is what Judah swing. Okay, he has some fancy names. Okay,
Okay, yeah.
yeah, this is what he calls the Judah swing. Okay, the false run in the opposite direction. Okay, a false run in the opposite direction, inducing bias into the market. See, a fake trend line forming, more and more bias are getting induced. But what are they actually doing? Why are they doing this? Okay, first thing to induce bias, and then they are reaching a key level of resistance. Okay, a key level of resistance. Now, when I say a resistance, not the YouTube support and resistance stuff, not that. Okay, something like a high probable bearish order block.
Okay.
That is what they're reaching now. Why is this high probable? Because we have Asian range liquidity being fed into that point of interest. See that? Asian sessions liquidity being fed into that point of interest. So price goes up. A false run in the opposite direction. Now I will show you examples of this thing. Don't worry. Okay, I'll show you examples. So a false run in the opposite direction. So with London Open, what happens? Bam. Everyone will get taken out. Okay, everyone will get taken out. So this is what happens. Okay, see now trend line traders, breakout traders, okay, maybe smart money traders too. Okay, smart money traders too who wanted to buy from these areas and all of that, even they will get taken out and then they will reverse this thing like this. Okay, this is what happens. So keep in mind, this is what we call the Judah swing. The Judah swing. Okay, a false run in the opposite direction. A false run in the opposite direction, or else we have a accumulation, manipulation, and then a distribution, the AMD. Okay, this is what ICT calls the AMD, accumulation, manipulation, distribution. So the manipulation usually occurs during London Open. Okay, during London Open. So this is what happens on a bearish day. Now, since we're from India, yes, now since you're from India and I'm from Sri Lanka, so we're in the same time zone. So we can trade London and New York both. Okay, we can trade London and New York both. But I'll tell you, trade London. Okay, London is the easiest to trade, and like all of the quick moves happen during London. Like if you get one trade like this, like you're done for the day, right?
Yes.
This is all you need. This is all you need. Okay, so I'll show you how to get that. This is all you need. You're taking a sell here, targeting the Asian low, and bam, like within minutes. Like will like most of the time, this will happen like in less than 1 hour. Like this is all you need, right? In 1 hour, your targets are hit and
Is
you're
it
out
known
of
as
the
an
market. Yeah.
ICT kill zone, right?
Yeah. Okay. Now the ICT kill zone start 1 hour before the session. Okay.
When do
The
they start?
London kill zone. Yeah. 1 hour before the session. 1 hour before London session is the London kill zone. Okay. 1 hour before the New York session is the New York kill zone. Okay. So like, yeah. Now basically the London kill zone is the Frankfurt session. Okay, it's the Frankfurt session, but yeah, we call it a kill zone because that is where like something like a lot of fake moves will happen, a fake breakout structure. They will give you all of that, and then with London Open, everyone will get taken out. I'll show you. Okay, because the sessions will always open with fake moves. Okay, the sessions will always open with fake moves. Okay, so I'll show you that, but you get this thing right. I hope you understood it.
Sure,
Yeah.
sure.
Okay. Sorry for that. So that's about that. And same thing on a bullish day. Okay, what they're going to do is they will give you a false run in the opposite direction like this. Why? First thing, session breakout traders will get induced. They will think, okay, now price is going to fall. Okay, and then a fake trend line forming and all of that liquidity getting built up. But what are they doing? A false run in the opposite direction. Okay, a false run in the opposite direction. Why are they doing that? Okay, why are they doing that? Building up more and more liquidity. Okay, sellers are getting induced, sellers are getting induced, but what they are actually doing is they are reaching a key level of support, something like a high probable point of interest. Okay, a high probable point of interest like this. So it drops back down, and then what happens with London Open? Bam, reverses. Okay, so this is what we call the Judah swing right here. Okay, the false run in the opposite direction. That is what we call the Judah swing. Like sellers will get induced into the market, this fake trend line is forming, everyone will be wanting to sell this thing. With London kill zone or as with London Open, bam, everyone will get stopped out. Okay, so there's the Judah swing. So it's always been now. We can do two things. Okay, now I'll show you examples. Okay, we can do two things. What I would do is I will sell it from here to here and then buy it from here to here. Okay, like there are ways that you can trade the fake move and you can trade the right move too. Okay, but you have to do a lot of back testing. I'll show you. Okay, this is what I always do. I'll sell it and then I'll buy it. Okay, so we are like if you know their intentions, you can play along with them. Okay, so all of this stuff is possible not with London Open, but yeah, even with New York, it's the same thing. Okay, now London will open, and after 1 or 2 hours, it will go into the London lunch. Okay, the London lunch. So same thing. Once again, it might start building up some liquidity like this. With New York Open, they will do this. Bam. Okay, so same thing that happens here. Asia builds the context for London Open. London lunch builds the context for New York Open. They will do this and then bam.
Okay.
Okay, this is what's
So
gonna
all
happen.
of these things have been
Yeah,
told as
yeah,
something like the price time theory.
yeah. Even like time and price. Okay, time and
Exactly.
price will
This is
play
the
a major
dynamic
role.
relation, right?
Yeah, now this is not actually it. Okay, now ICT is the one that knows the time and price thing properly, but this is all I know, honestly. Okay, I do not know anything about this, but I'll show you how time and price works. Okay, because with London Open, with London Keys on Open, a lot of fake moves will happen. Okay, so you can trade all of that too, even the fake moves, you can trade it, knowing that it's a fake move. Okay, so yeah, this is what happens with London Lunch. They will build up some liquidity, so price will drop back down with New York Open into that order block that was created during London. Okay,
Okay.
like this. And then yeah, when price comes here, you can look for a setup once again for what are we looking for? Simply a bullish QM, and then you can buy this like that. Okay, so this is what happens. This is what happens. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Okay, that is how it goes. Can you understand it? Yeah.
So this happens every day,
Okay.
right?
Not every single day. Okay, now yeah, it happens every day. Okay, now because I will show you examples, it actually happens every single day. Okay, it happens every single day, but the thing is, okay, but the thing is it doesn't happen very clearly. Okay, it does not happen that clearly, but it's the same stuff that keeps on happening every single day. Okay, it's the same stuff that happens in different ways. This same stuff will happen in different ways because just think of it, if they keep on doing this every single day, then everyone will figure this out, right? Then
Yeah, sure.
everyone will figure this out. Okay, so it does not happen that clearly, but yeah, it's the same logic behind every single thing. Okay, so this is about the Asian session thing. And yeah, Asian highs, Asian lows, and the Asian midline. Okay, so even the Asian midline will be very powerful. Because why? Now let's say price is in a consolidation. So to break out of this consolidation, now you have seen this, right? Like sudden breaks out of a consolidation. Okay, so to break out of the consolidation, the institutions are going to use the equilibrium level of the consolidation. Can you understand it? Okay, they are going to use the equilibrium price of this consolidation to break out of it. So if there is a point of interest lining up with the equilibrium level of a consolidation, it is going to be high probable. Okay, give me a second, I'm having a cough, give me a second. Okay.
Okay.
Okay, so if there is a point of interest, can you hear me? Yeah,
Yeah.
can you hear me, bro?
Yes. Yes.
Okay, so if there is a point of interest lining up with the equilibrium level of a consolidation, it is going to be high probable. Okay, now we're not going to expect direct moves like this. No, we're going to expect liquidity to get built up and then a move like this. Okay, liquidity is the main thing. So this is only for extra confluence. Okay, so same thing. Now, Asian session is also a consolidation, right? So to break out of Asia, most of the time they are going to use the equilibrium level of the Asian session, the midline, Asian midline. That is what we call it. So if there is an order block or is some some point of interest lining up with the Asian midline, that also can be used for extra confluence. Okay, confluences of events. Can you understand that? Yeah.
Okay.
Okay. So see, even in this example, okay, where did price come into? Now this is a very high probable setup. See there? Where did price come into? Right into the midline. Okay, we have liquidity. Okay, we have the QM level. We have the Asian midline. All of that. Look at the move there. Bam. A very high probable setup. Okay, like you know the QM levels, right? The QMLs. Bam. This is where the QM is. And then liquidity got built up, tapped, and it goes. Okay, tapped and it goes. So this will be a very, very high probable setup. Asian midline is also here. Okay, so can you understand that? Yeah? Okay, that's about that. And then let's go into the high time frames once again. So now you know why we are not gonna trust this low to hold, right? We know why now you know a lot of liquidity is resting below that low. So you are not gonna expect that to hold. Okay, you're not gonna expect that to hold. So we can't take this as the liquidity and then wait for this to play out. Because look at this. How far away this is from this low. 30 pips away from the point of interest. So there will not be 30 pip manipulations, right? Who will do a 30 pip manipulation? Because if it now after taking this low out, if it keeps dropping for 30 pips, then the people that had their sell stops here will be in deep profits, right? Will be in deep profits. Okay, so that won't happen. They will quickly, after taking that low out, they'll quickly pull back up. Okay, they will quickly pull back up. So you have to look for a point of interest that is closer to this inducement. Okay, closer to the inducement. Now, actually, you don't even have to have a point of interest. If you know that this is liquidity, simply what you can do is as soon as it gets taken out, look for a bullish QM to form, buy it here. That's it.
Okay.
You can buy it here. Okay, so you don't even have to have a point of interest. But yeah, if you really want to, you can look for a point of interest. And if you pay close attention, you can see from the high of this wick to the low of this wick, there's a little imbalance left.
Yes.
See that?
Yes.
Now this is not an accident. Okay, this is nothing random. They did this on purpose. Okay, they did this on purpose because now they have a reason to come back down, right? Now they have a reason to come back down and fill the imbalance because there is a lot of liquidity resting below that low. Okay, so this is how I would personally refine it. I will refine it to this wick. That's it.
Okay.
Okay, my entry on the imbalance close price action, my stop loss below this, below this wick right here, or as the body of the candle that has the imbalance. Okay, this is how I would personally refine it. Can you understand that? Yeah. Yeah,
But
like this.
I have some doubts because we can take that wick also as a dimension, right?
Yeah, you can even take this week.
The
You
whole
can
week.
even take this week. Okay, yeah, you can even take the whole week. Okay, but for me personally, I will always look for the one that is look for the point of interest that is closest to the inducement. So what's the closest one? It's the imbalance, right?
Yeah.
The imbalance is the one that is closest, not this week. Okay, not the week, the imbalance. Okay, so I'm gonna use
So
the
you say
imbalance
that
there.
we should
Yeah.
look for some sort of imbalance and a POI.
No, it's like this.
Come.
You have to use the one that is closest. See that?
Okay.
You can use the one that is closest to the inducement. So what's the closest point of interest you have? It's the imbalance, right? Not the wick. not the wick, it's the imbalance. So we can use that imbalance there. Okay.
Okay.
And
So
then
we are using the 4 hour time frame for identifying these kinds of higher time frame structure, right? Or
now anything, any time frame. Okay, now I'm just going to show you the example of this thing. Okay, I just wanted to show you an example only because price is fractal. Okay,
yes,
price is fractal. So the same thing happens on every single time frame. Okay, every single time frame. Okay, now this is not only applicable for lower time frames. Okay, so
okay,
you can do this. Stop loss here. Give me a second. Like, sorry for that. I'm having a little cough today. Okay, see that? And we're targeting higher prices. Okay, give me a second.
okay.
Okay, can you hear me, bro?
Yes,
Sorry for that. My voice is a bit off. Okay. So we're doing something like this now. When everyone else is wanting to buy from these areas like this, okay, with their stop losses all below this low, we're gonna buy below that. See that? We're gonna
okay,
buy below that now. Why would you want to go to a lower time frame? It's just 4.6 pips. See that? Why would you want to go to a lower time frame? Okay, because we use lower time frame only for refinements, right? Now, why would you want to refine this? This is a 4.6 pip stop loss. Okay, so then what happened? What happened? Right into the entry and then look at the rejection. Look at the rejection. Okay, this is that rejection you will get every single time you get the right entry. Okay, look at the rejection. Okay, like instant profits. As soon as it taps you in, you're in 40, yeah, 50 pip profits. Okay, and then where are we targeting? We're targeting this high itself.
okay,
Okay, we're targeting that high itself. And if you look into market structure now, what happened? Higher highs, higher lows, higher highs, higher lows, higher highs, and a fake breakout structure. See that?
yes,
A fake breakout structure right here. Now, what did they do? When they broke below that low, now everyone would have looked at this as a breakout structure, and now they will be wanting to sell from these areas, right? Expecting moves like this.
yes,
Can you understand it? Okay, because why? This was a breakout structure for them. Okay, so then what they would do is they will, yeah, they might look for points of interest from these areas and they will be looking to sell this thing, right?
yes,
They will be looking to sell this thing from these areas. Okay, and look at what happened. Look at what happened. Okay, it started going up. See, this is the reaction you will get. Okay, it will shoot up. It will shoot up. And when price gets into these areas, look at that. Okay, what happened? Look at the drop. Why are they doing that? Inducements. Inducements. See, even a breakout structure. Even a breakout structure. So imagine after this breakout structure, how many people would have wanted to sell it from these areas? See that? How many people would have wanted to sell it from these areas? A lot, right? A lot of people. Now, remember, in these types of candles, the volume is always in the body. Okay, so you don't have to mark out the whole thing like this. You can just mark out the body. Okay, so yeah, everyone will be willing to sell from these areas. But if you take a look into the bigger picture, okay, look at all of this liquidity getting built up, a fake resistance.
yes,
See that? Every single time price comes into that level, what happens? It drops. It comes into that level, it drops. See that?
yes,
So that's a retail resistance, right? That's a retail resistance. So we are not going to trust them. Okay, that should be our target. Okay, the retail resistance should be our target. Now look how risky sells from this areas are. Very risky, right? Very, very risky because a lot of liquidity is resting above that high. Okay, a lot of liquidity is resting above that high. Like even I took this sell here, no problem with that. Even I took this sell here, but I'm not gonna hold this into these areas. Okay, because keep in mind the exits are more important than entries. Okay, like anyone can enter anywhere, but where are you gonna pay yourself? That's the most important thing. Okay, now imagine if I took a sell here and did not take anything off until it gets here. What happens? I'm going to get stopped out, right? Because look at all of this liquidity. Okay, and since we are intraday traders, we could trade this thing because that's see that? That's an 80 pip move. Okay, that is an 80 pip move. So for an intraday trader, that's more than enough, right?
yeah,
That's more than enough. Okay, so yeah, even I took it and I closed everything from this imbalance. That's it because of all of this liquidity. Okay, because of all of that liquidity, and I closed everything. Then price started retracing. Now imagine how many people would have wanted to sell it from these areas. And look at the reaction once again. Look at the reaction. Why? Liquidity. More and more liquidity is getting built up. Now people might have taken this as a QM. Stop hunt, breakout structure, and they will be wanting to sell from these areas. But then again, you have to always look into the liquidity. See this? A lot of liquidity is getting built up. So then again, I told you, right? If liquidity is getting built up, what are we going to do? Look for a point of interest above that, because that's going to be high probable, right? Liquid above an entry above the liquidity, I told you. So if you look at this, can you see this imbalance? See that? So why did they leave it there? Okay, nothing random. Nothing random. Now you might be looking at this imbalance too, but this imbalance was actually filled on most of the brokers. Okay, you know, from broker to broker, the information differs. Okay, so always, yeah, trust the broker that you're using. Okay, trust the broker that you're using, like the one that you use to execute your trades on MT4. Okay, so let's say if it's IC market, see if IC market has filled it. Okay, but yeah, on most of the brokers, this thing right here was filled. So this was the one that was not filled. Okay, so if this is liquidity, this is going to be high probable, right? This is going to be high probable. And then what happened? Now imagine how many sellers are trapped here. Fake resistance, smart money traders, the ones that are trading market structure, everyone is trapped here, right? Everyone is trapped here. And then what happened? Straight through it. Okay, straight through it. Okay, now I honestly, I took this sell here, but I couldn't take the, I took this buy here, but I couldn't take the sell. Okay, I could not take the sell here. Okay, because yeah, I think I did not trade that day or something. But yeah, what happened? Tapped into the imbalance and now it's coming back down. See that? Just a little tap into the imbalance and it's coming back down. Now, why was that imbalance high probable? Because of all of that liquidity. Yeah, I'll have to refresh this every single time, every 10 minutes, because there's an issue with trading which is laggy. Okay, so yeah, price will go up, and look what happened to the smart money traders. Wanted to buy here, stopped out. Wanted to sell here, stopped out. See that? They have no idea what's going on. No idea what's going on. But if you look into the liquidity, you know what's going on. See that? And even the retail traders, see that? A broken resistance might turn into a support. So they will be expecting moves like this. See that? They'll be expecting moves like this. But what happened? What happened? Now they're falling back down. Look at that. Once you enter with liquidity, this is the reaction you get. 60 pips instantly. Instant 60 pips. Okay, this is the reaction you get every single time you enter with the liquidity. Look how hard it's falling. Okay, it will fall back down like crazy. Okay, so it dropped back down, and then yeah, let's go to the 4 hour. Let's go to the 4 hour, and then look at this. This liquidity, this liquidity. Okay, that is what shows you that a huge reversal is about to happen, right? Can you understand that? When there is liquidity like this, you can expect a huge reversal to happen all the time. Okay, all the time. So then now look at this. A reversal is about to happen, right? Look at all of this liquidity getting built up. A fake resistance. Okay, a fake resistance. And then what happened? Now they're falling. Now they're falling like crazy.
That was huge.
Look at that. Yeah, like if you took a sell there, you are still in profits. See that? If you took a sell there, yeah, that was like 600 pips, I guess. Yeah, almost 600 pips. Okay, so that's the thing. You understand the concept, right? Where is the liquidity? Entry below that. Where is the liquidity? Entry above that. Okay, always like dodge their traps. Like see, even like how many times did they fool you? Look at this breakout structure. Look at that fake breakout structure when it taps here. How many sellers are induced here to get their confirmation entries? See that? How many traders are induced here? Okay, like if you go to a lower time frame, look at the reaction they gave. Okay, look at that reaction when price tapped into these areas. Look at the reaction. Why? Inducements. Okay, inducements. See, like a 30 pip reaction, and then what happened? Straight through it. Straight through it. Tapped into this, and then it dropped. Okay, that's the thing. Okay, so you have to always pay attention to like all of the liquidity that is getting built up. Okay, that's the main thing. Okay, you have to pay attention to that. And yeah, that's it. A very simple trade. A very simple trade. Like look how they fall all the time. It will come into your entry like super fast. Okay, but like what have we been taught? Do not catch a falling knife, right? Do not catch a falling knife. So who would want to enter it here? Look at how it's dropping. A very quick move and then a very quick move to the upside. See that? Okay, so you have to always pay attention to all of this stuff. Okay, because we're price action traders, right? We have to pay attention to everything that price action is showing you. Okay, everything. So that's the thing. It dropped back down very quickly, cleared out all of this liquidity. So we entered here and then it started going up. Okay, very simple. Can you understand it? Yeah.
Yeah.
Okay. So that's about
I
that.
have
Yeah.
some doubts. Can you please
Okay.
give me the access to the annotation tool?
Yeah, I think I have given you permission.
Yeah, yeah.
Yeah.
So can I mark?
Yeah, yeah, sure. You can do anything.
Um, See, one thing I always got confused about is this
Okay.
thing. You see this thing, this wick.
Okay.
The whole of this wick is an unmitigated zone, right?
Yeah, it's an unmitigated zone.
So what I will do is I will
Yeah.
wait for it to come down here and wait for a QM or kind of a
Into
G
the
form,
wick?
and yes. So
No.
that thing always get into a
Yeah,
confusion.
that's why I told you. The closest one. Okay, the closest one. What's your closest one? What's your closest point of interest? Now, when I
So
say a point of
you
interest,
are saying
yeah,
that here we have an imbalance. That's the reason
yeah, that's the
you
reason.
took this
That's
wick.
the reason why I'm taking it exactly. Now, if there was no imbalance, if it was only this wick, for sure I'm going to use the wick. See that?
Okay.
For sure I'm going to use the wick. Okay,
Okay.
but if there is nothing like that, now in this example, let's see that there was no imbalance, so we could have used the wick.
Okay.
See that? We could have used the wick because why? The imbalance was up here. Okay, so then you could have used the wick. But yeah, in here, the situation is different. We had a little imbalance right above the liquidity. See that? Right above the liquidity. So then you can use that. Okay?
Okay.
So yeah, that's about that. And yeah, so is it clear? Let me know.
Yes. And
Yeah.
one more thing.
Okay.
Where is the dot? Yeah. Mhm. Okay. Here you took the body, candle body
Which one?
as the zone.
Yeah.
So why
Yeah.
did you took that as a zone?
Why didn't I
I mean,
use this as a zone?
why did you consider the body as a zone?
Now it's like this, okay? Now this is an order block, right? The last push up before the push down. Okay.
Mhm.
So in these types of candles, in these doji types of candles, the volume of this candle is in the body, not the wick. Okay, not the wick. It is in the body of the candle right here. Okay, like if you go to a lower time frame, you might see that. Yeah. Okay. See that? Now, yeah, you can't actually see it on this time frame. Okay. Yeah. Maybe on this time frame. Okay. See, the volume is always in the body. See, lining up with that level, there is another order block. So even in this candle, the volume is in the body. Okay. The volume is in the body, and you might even have a breaker block in this area. Yeah. See that? Okay. So the volume is always in the body. Okay. So keep that in mind. So you don't have to mark out that whole area. Like I'll show you another example. Yeah, right